moving on to Cosmos. So now this currency is bearish, way below this moving average. Looks pretty weak and kind of flat, to be honest. So I'd be looking to short this. I'd be looking to short it to this previous area. Could go to this one, but I would like to go a little bit further. You might as well. You can see all these weekly candles here. Very wicky, so very weak. This wants to go low. So I would look for something like this. This would be perfect. It's kind of a thick zone as far as like setting a stop loss. So you don't get as good of an R. I mean, 4 isn't too bad, but what you could do is wait for price to come back up here, and then as it rejects and demonstrates some wicks, you could move this stop to just above those wicks. So right now you could place it at this wick, and then if there's new wicks over here when price comes back up and they're way below this wick, then you could just drop this to just above those new wicks and then enter the long, or enter the short position there. So something like that would be perfect, or just wait for price to break this area. If it breaks this, so you got two options. I'm willing to bet that price breaks this area first before coming back up to here. It probably won't come back up to here. I just don't think there's enough bullish momentum to push it up, and I do think this looks really weak, and it's tested this zone like 5-6 times now, so that wants to come down. So option one is wait for price to come back up to this major zone, then take a position just like I've drawn up here. You can initially set your stop above this area, and then I mean you're super safe. Chance of price coming back up that high, very slim. So that's, you know, this is conservative trade 1, this is conservative trade 2, about, you know, placing the stop just above those new candles. And then there's this one. So if price breaks this area and closes on a daily candle is bearish through this zone, then you wait for a retest as close as it can get back to this zone. Then obviously you want to wait for a little bit of rejection, at least a 4-hour candle wicking or something, and then set your stop just like I have here above this area, and then look for a short. And like this is how you get a good R ratio, plus you get to take the trade when it's got the heavy momentum. For example, like this pair is bearish and it will most likely go down, but if you sell it when it's coming back up to here, I mean, you're literally selling it as it's coming up. So that's kind of, I mean, it works, and like this is a heavy resistance zone, so it's likely not going to go above this zone. So that is a good trade. However, anytime if you can get in on the trade when price is moving in your favor, ideally the direction of the trade, which is, it's a short position, so you want to catch price as it's going down. So if this prints a big bearish candle and then a little tiny bull candle up into this zone and just retests it like this, nice, then that's perfect, because you can see that the bearish momentum's already in the markets. The markets already want to sell this. They already did sell it. They sold it through this zone. So the selling pressure is there. Then you jump in on that short, and then all of a sudden it just, boom, falls, and you catch something. You know, you can go right to this zone, something like this. Very conservative trade. Very, you know, good reward. Relatively low risk. It moves about I gotta estimate here, maybe like $1.30, $1.40. So yeah, that's only 57 cents here. So I mean, on a weekly, like it goes way more than that. So I mean, you could shoot for at least $1 here. So something like this is perfect. So you just gotta wait for that, and then you'd be good to go. So that's Cosmos.